What if you could buy a Bitcoin like you can buy a house? Actually, when you start to understand how borrowing to buy Bitcoin works, you'll realize it's actually way easier to borrow to buy a Bitcoin than it is to borrow to buy a house, and it may be a better investment. So in this video, I'm going to break down how to think about it, and if you want to try it, where you can do that. First, the idea is everybody wants to own one Bitcoin. If you own one Bitcoin, you are going to most likely be one of the richest people in the world because there's only 21 million of them and there's billions of people. And we may have less people or more people in the future, but we'll most likely never have 21 million people. And already there's a bunch of people that own a lot of Bitcoin. So by owning one Bitcoin, you should be in the upper echelon of economics in the world. So what if you could borrow most of the money it took to buy one right now and wait for the price to grow by paying down the loan? And this actually came up in a conversation in my online free community, Wealth Stackers. The link should be in the description, but we have a weekly call and one of the customers asked, can I do this? How much do I need to put down to buy a full Bitcoin? And that was a very, very interesting question. I hadn't really thought of it that way. He said what he wants to do is buy the Bitcoin and then pay down the loan over however long it takes. So the sooner he does it, the less of a loan he would have to pay off. And that was super interesting. But in that conversation, I went over my pros and cons, and I decided just to make a short video explaining it to see if it's something anybody else would want to do. So of course, if you don't watch the full video, you can go either join the community the link is down in the description. You can go to stackit.ai/community, or you can download a free guide that teaches you how to do it. Also, it will be in the description, or you can go to stackit.ai/guide. Why do this? Why take out a loan for a Bitcoin, right? Full exposure of a Bitcoin right now. It may be a good time to buy, it may not be, right? We just literally, after he said it, he said, I want to buy it now because I think it's going to go up. And I said, yes, but it could also go down. From the time he said it to today, it went up about 7,000, 8,000, something like that. I forget. I think it was 105 when he said it, or 108, something like that. Now it's 117,000. In a week, it grew a lot. So again, with a volatile asset, you could end up borrowing at a higher value than it is, because if you borrowed it, like let's say you borrowed for today and then the price fell down to 90K, you owe more money than the value of the Bitcoin. So that's not a great place to be. But if you're dollar cost averaging, you can buy more Bitcoin when that price comes down, and now you have more, right? So that was one of the things I really spoke about. Another big thing is we're in this like possible start of a bull run or possible end of a bull run, and nobody really knows, right? At the end of the day, a lot of people believe Bitcoin should reach way higher heights by the end of this year, but nobody really knows. And that's why you got to have conviction. If you really believe right now is the best time you'll ever have to buy a Bitcoin, then borrowing to get it makes total sense. And if you think about it in the real estate sense of the investment, if you were able to borrow money to buy a house in the 1960s, when houses were like less than 100,000 that are now worth millions and millions of dollars, you would have done that. And if you believe right now Bitcoin is worth 100 and something thousand, and one day it'll be worth a million, if not millions of dollars, kind of makes sense to borrow to buy one. Just does. It's just, I think the next question is just, how do you do it? Whether you do it all in one shot or you do it over time. That's the question I'm asking myself as well. The house analogy, right? People borrow to buy homes all the time, whether it's for investment or to live in. If you're buying a home to live in, I don't know if that's a similar decision, right? Because you need somewhere to live, and everybody knows, you know, buying a house to live in versus renting, sometimes that's more, it's cheaper to rent than to buy, and sometimes it's cheaper to buy than to rent. Right now, we're living in a time where it's cheaper to rent than to buy. Who knows how long this continues? But if you were about to buy a house today versus borrow to buy a Bitcoin today, you're probably better off buying the Bitcoin, because right now prices of homes have appreciated fast, but so have Bitcoin. So it could be, you can go down 50% on a home value or a Bitcoin value. So again, this is where the risk comes in. But the idea is homes are finite as well, but they don't have to be, right? There's a bunch of land around this world that doesn't have homes on them. And the only reason there's not more homes is because governments kind of limit how much properties being is able to be built. And there's not more homes because there's not possible. There's just not enough homes for everyone because the government doesn't allow us to build in all the open land that's available. So the truth is, as things like labor come down and property availability to build, I think houses are going to come down in value. Again, not financial advice, but if you think about it, what's the most expensive part of building a house? It's the human labor. So if in 5, let's say 10 years, you can hire a robot to build you a house and that robot can work 24/7 and you paid for it one time, and they're already saying the robot cost is going to cost less than a car. So let's say high end, the robot costs 20,000 and you can rent it. You're not going to have to pay 20,000 in one shot. You can pay $300 a month for 7 years or something like that. And you can have this robot build you a house. And thousands and millions of people can do this. Houses are going to be cost a lot less to build. All you're going to need is the equipment. I mean, the material. And again, this starts to go into the realm of unbelievable. Most people do not even understand this stuff is going to be possible, let alone believe it is going to be possible. So let's just not take that into account and say all houses will continue to be valuable and grow in value. Most houses only grow in value 3 to 5% a year if you're lucky. And if you're really lucky and bought in a very up and coming area, it can get higher than that, but not much higher. Bitcoin has been growing on average 50, 60, 70% a year. So no home, no matter where you buy it, is going to do that. And that is kind of the point, right? Most people have to borrow to buy a home. Most people don't have the full amount. If you go in to buy a home right now, and the average price, I believe, is about 350K in the United States. Most people don't have 350K to pay down right away. They have to put down 20% and then borrow 80%. And then over 30 years, they'll pay off that home. And if you're buying it for rental property, you take the rental income and pay down the loan. So you end up having the renters pay off your debt. But what if every time when you bought a Bitcoin, every time the price rose, you took some of that profit to pay down the loan. And now you're taking profits to pay down the loan at the same time bringing in new money to buy it as the prices go up and down. You should get to this one Bitcoin and have low amounts of debt over time, right? Depending on how much you can do. So it's very interesting to think about, because if you buy a Bitcoin today and you spend, let's say you borrow, when the guy said it, all he needed to borrow was about 30K to buy a Bitcoin, but now it went up. So it's about probably 40, 45K. And that just happened in 1 week. So I do think the price should fall soon. So again, depending on when you're watching this and the price of Bitcoin, it's more or less you would need to borrow over, and then you have forever to pay it off, right? So the idea is, if you buy Bitcoin today, let's say you have to borrow you have to deposit 45,000, borrow 70,000. That's if you did it today. Now you got however long you need to pay down $70,000 of debt. And as prices of Bitcoin go up, let's say Bitcoin does what a lot of people believe it's going to do, and by the end of the year, it's worth $250,000. And now you only have a 70K debt, right? So now you can say, you know what? Let me just take some of this profit and pay that debt off. Yes, I'll have less than one Bitcoin, but now I can keep buying into it without debt. Unless you want to keep buying with more debt, which, to be honest, is probably the better move. If you look at the real estate investors that make millions, if not billions, they don't just borrow one time. They borrow to buy the first property. Then they borrow off that property to buy the next property, the next property, and the next property. They look up, they have multiple properties and they're worth millions of dollars. Same thing will be possible here. And it's easier because we use smart contracts, not bank contracts. For a bank contract, you need to go into a bank and ask them permission to borrow this 70,000 based on your credit score, your work history, your current debt. They can say no. But if you have any amount of money, you can borrow on top of that using smart contracts. So you can, instead of buying $45,000 and borrowing 70 today, you can spend $1,000 a month and borrow $2,500 every month and slowly get up to that one Bitcoin. And that to me may be the safer route anyway, because we don't know how the prices are going to go up and down. Right now we're at an up, but if it comes down tomorrow and you over borrowed, but the risk is the price keeps going up. And that is a risk. I just don't believe it's what's going to happen, but it could. So that's where the risk is of buying slowly. So what could go right? We spoke about some of the things that could go right. One is the price goes up. Like if that guy would have pulled the trigger when he said it, he would have bought Bitcoin. He would have borrowed, I believe, 60K. Deposited, he would have borrowed 70K, but deposited 35, something like that. And today, his collateral, which was 105,000, because remember, you're putting the 30 plus borrowing 70, 35 plus 70, his collateral was 105,000. Today, his collateral will be 117,000, and his loan is still 75,000. So, 70,000. So now he would have been able to take that 10K and pay down that loan 10,000. And that's good, right? Yes, he would have a little bit less Bitcoin though, but he would also have less debt. So now, because when the price came back down, now he has less debt to repay. Another option is, as that price went up, he could have took some of the profit, meaning he could have turned some of that Bitcoin into dollars. Now when the price falls down, he could take that extra cash and buy more. And I believe that's the best thing to do. And that's actually what Stack does automatically. So basically Stack will, as the prices go up, sell some. And as the prices come down, pay off the loan if it's getting too close. But continue its dollar cost averaging. So if your price is up here and we sell some to be USDC, we continue the dollar cost average as the price goes down. If the price goes down super fast and it's going to be what's called liquidated, which means your loan touches your collateral, meaning let's say Bitcoin goes down to 70,000 from 116, which is possible, and you got a 70K loan. These smart contracts won't allow themselves to lose money, so they will sell your collateral to pay off some of the loan. So let's say you take 30,000 to pay off the loan. Your collateral goes down to 70,000. They'll take 30K, pay off the loan. Now you got a 40K loan and 40K of Bitcoin. What we do is we're selling, so you never really have that situation. When the prices are falling, you got more cash to buy in. And if it does happen, we'll push up what's called your health score by paying off the loan with some of that cash. So I've thought about this for many years, and you could do it with any amount of money, month by month, to build up. But to this week, when he said it, even me, I have cash sitting on the sidelines. I run a business. I don't want to put all my money in Bitcoin and then tomorrow it goes down and I don't have money to run my business. But even when he said it, I was like, should I do this? I've already accumulated, but it's not a bad idea to accumulate more. This is why it's awesome running this business as a community, not just a team of builders. Getting feedback from before we even public has been game changing. So now hearing this and putting it into place may change the way we market. Who knows? But at the end of the day, it is a good idea to think about and figure out for yourself if it makes sense for you. What could go wrong? I did speak a little bit about this. What could go wrong is as the prices go up, you could end up borrowing to buy the Bitcoin at the height of the price. So for instance, let's say, and again, who knows if this is going to happen today, but let's say today the price of Bitcoin is 117, let's just say, and you borrow to buy the full Bitcoin and the price falls. Now you do owe extra money than you would if you were dollar cost averaging and buying it slowly. So there's no silver bullet. Nobody knows where the price is going to go up or down. So the safer route is to dollar cost average versus just buying a big amount up front, because you're basically hoping it goes up. And if you're dollar cost averaging, you're hoping it goes down, right? And again, if you look at the charts, it goes down more than it goes up, right? So there's good high points where the prices are high, but it's more about choppy bottoms than heights, right? You'll see quick heights and then drops. And that's where I've seen that this idea of over borrowing become a problem. But if you're paying down the loan consistently every month or bringing in money in every month, it's not a bad idea, because you are protecting against those falls by bringing in money every month. And then you could always borrow more when the prices come down, right? So if the prices are falling, you can put in more money then and borrow more. So today we're at a height, and the problem is, truthfully, as a person running this app for going on the 3rd year now, most people bring in money when the prices are the highest. We see the most amount of deposits when prices are up. Why? Because of FOMO. It doesn't matter the level of wealth the person has. I have people who are school teachers. I have people who are retired, net worth, multi-million dollars, and they all bring in money at the same time when the prices are the highest. So my biggest challenge of this business is trying to figure out how to get people to be consistent so they could take more advantage of the lows, because most people only buy when the prices are the highest. Okay, and this is the DCA alternative, right? So the idea is, instead of buying it in one shot, let's say you couldn't afford 45,000, which most people can't, right? You can't afford 45,000 today as a down payment to buy a Bitcoin. But $45,000 divided by 12 months, 24 months, and yes, by then Bitcoin could be a lot higher, but it also could be lower, right? Like, we've seen bull runs where the price goes up and then it comes back down. So right now, there's many people that believe Bitcoin will eventually go back down to 60, 50, who knows? But the problem is, it might never do that. That's where you have to take a risk or choose which way that you believe, what you believe is going to happen. And since I know from literally, it's been years of me watching the market and me thinking I can time it and really realizing that I can't, I will dollar cost average. I'm okay knowing that this is a multi-decade plan of mine to own as much Bitcoin and Ethereum as possible. So I'm just going to dollar cost average, run my business, dollar cost average. Yeah, it's nice that the price is up right now, but I'm just dollar cost averaging. Price could go up more tomorrow. I'm just going to keep dollar cost averaging, because I know I don't need to gain 50% a year if I'm long-term investing. If you invest and you just get a 15% a year growth for in a decade, you will make a lot of money. And of course, the more you invest, the more money you will make. But imagine 20, 30 years, which is my plan. Dollar cost average till I die and borrow to live. That's it. And because eventually Bitcoin does its thing, gets to $1 million a coin, and let's say I have 4 Bitcoins, that's 4 million. And even if I have $1 million loan, I still got $3 million of net worth that I can borrow from anytime I want. And I can let it keep compounding even after I'm dead. And my family can benefit from that by borrowing off of it as well. And of course, that's why I built Stack, to really build that. So borrow versus DTA. This is the head-to-head, right? Okay. Borrow all is the pro is it's always risky. Both sides, right? It's risky if the price is high. It's risky if the price is low. Anytime you borrow money, that's risky. The beauty of borrowing money this way is all you can lose is your down payment. That's true with a house as well, but it also hits your credit, right? So if you bought a house, if you borrowed to buy a house and the house was so expensive and then the price of the house went down and you had to sell it, you would lose that value, just like with Bitcoin. If you're unable to pay the loan of a house, you foreclose on that house and that will damage your credit. And that is stressful, right? It can grow. And with Bitcoin, it's going to be the same idea without the credit. So let's say you put in 104, or you put in 45,000, borrow 70, price falls. If you stack, we will protect that fall and not let it go below your loan. So you will never get to the point where your loan is being what's called liquidated, but you will lose value. And in stack, you can actually choose how much you will allow it to lose in value before we start selling. But let's say you allow it to be very aggressive and it falls a lot. You still will have more than your loan. And if you dollar cost average, you will buy more in, right? And if at some point, if it starts falling a lot, we will have to sell all your Bitcoin. And then if we sold all your Bitcoin and now Bitcoin is worth a lot less, you can buy back in at that lower price. This is why the consistency is so important. The cons of doing this is if you buy at the wrong time, right? If you buy at the right time and you're dollar cost averaging, then if the price goes up, you bought. If the price goes down, you bought. Price goes up, you bought. But you're borrowing on top, right? So if you're putting in $1,000, borrowing $2,500 every month, let's say it's going to take you 45 months to do that. That's 4 years. Now, no, actually, I'm wrong. 1,000, you borrow 2,500. It'll take you about a year and a half or something like that. In a year and a half, the price can go up, down, but every month you're just bringing in 1,000, borrowing 2,500. In a year, you will have 33,000 of deposit. Yeah, so it is more. It's more like 3 years. So, and that's if Bitcoin grows, you can take advantage of that growth, and as it falls, you can buy more. So you can play around with the dollar cost averaging. If you buy it now, you're stuck at the value you borrowed at. And now you have to really just protect that value. So if it falls, you need to sell to protect and pay down your loan. So those are the big differences. And if you don't understand any of this, reach out. I know there's a lot to understand. Join the free community to learn more. But I think this is one of the most important things you'll have to learn now. Because if you think about where we're heading, if you don't own assets, you're most likely depending on salary and wages or government transfers, meaning government assistance. Already, 1 in every 3 people in the United States has some form of government assistance. If AI hits and AI takes away jobs, so those wages go away, there will need to be more government assistance, and that will boost inflation, boosting assets. So you want to buy assets while you have a job to pay for them. And if you're on government assistance, you may want to buy some as well, because if all this plays out the way most people believe, inflation should be pretty high and that will grow asset value. So when does borrowing make sense? Again, this is where I do think if you're thinking about doing this, you really should think about how much you believe in Bitcoin, because one of the problems I've seen is people want to do it, but they don't really believe in Bitcoin. So when Bitcoin's price falls, they panic and they sell and they lose money. If when Bitcoin's price falls, you feel like, okay, this is the time to buy because it's on sale, that's the type of person I would say makes sense to borrow to buy Bitcoin. Or just buy it at all. Because the truth is, most people just do the opposite. They'll buy when it's high, sell when it's low, and they lose money. You got to be comfortable with the volatility. It's going to be up one day, down one day. We may need to protect your assets, so it's going to sell off sometimes, and you may have a little bit less Bitcoin or a lot less Bitcoin, depending on when you bought it and how much you borrowed. So I've seen that bite people as well. Like, they don't really love seeing their numbers change, but that's what volatility is. And if you take advantage of it, it can be very, very helpful. And then have a buffer. That's where the down payment is basically your buffer. So if you put in 45,000 and borrow 70, your buffer is 45,000. And if that buffer is falling because prices are falling, you need to decide at what point do you want to protect that buffer so it doesn't keep falling. Because I've seen people lose their buffer because they believe Bitcoin is going to go all the way back up, but it keeps falling and they didn't sell quick enough. And the app by default sells, but sometimes people go in and change stuff and it really affects them. And DCA, when is it a better move? When you don't want to time the market, like I was saying. I don't think it's ever a good idea to think you can time it. But some people are lucky and do it. I have people on the app that have made money that have timed it well. And truthfully, if the guy Monday would have done it and he would have had his money ready and been in the system, he would have made money. But he found out about the app a few weeks ago. He was doing his due diligence, so he hadn't done it. But if he would have made a quick amount of money. And I've seen people make money in weeks of bringing in money into Stack, again, because they caught perfect timing. For instance, when Donald Trump got elected, anybody who just started right before him saw an amazing gain, right? And again, that was lucky timing. So if you're not the type of person that, stresses about price changes, you know, DCAing may not work because you may be willing to take advantage of the potential, right? But if you are a person that's like, you know what, this is going to stress me out, so you should more likely just dollar cost average. You got to know yourself, right? You got to know what type of person you are about money. And if you're watching this, you probably already know yourself. But the truth is, the most calm and simple way to do this is just dollar cost average and go about your day. You're never gonna feel great when you put it all the money in and it goes up, it also comes down. So there's gonna be times where you feel great about your portfolio and not so great about your portfolio. And every time you don't feel that great because when the price is going up, you're like, should I sell? Should I sell right now? I'm up a lot of money. Should I sell? And if you don't do it and the price falls, you're like, oh man, I should have sold. But right there is when you should be buying more. But you're like, oh, I don't want to buy more because I don't know how low it's going to go. This is where just letting it dollar cost average and protect you is the best move, in my opinion. And this is how Stack helps. We help by borrowing at low interest rates on chain without you having to check your credit, check your debt payments. As long as you got the money as deposit, you could borrow as much as it allows. And then we also protect the loan. So if prices fall, we will protect that loan. So make sure that you don't get liquidated and we have to pay off some of that loan. And even if you got liquidated, if you did this without us, all liquidation means is you're paying off some of the loan you took with some of the collateral you have. So at the end of the day, it's not the worst thing in the world, but it is much better if you could take advantage of the volatility by selling at right points and buying back in at low points. So that's how you make more money, right? So if let's say you bought one Bitcoin, price went up. Let's take the example of today. Person bought that Bitcoin on Monday. It was worth 105,000. He took a loan for 75,000. Today, the price is 117. He sells today. Even if tomorrow goes to 125. He sells today. Now he got $117,000 of cash with a $75,000 loan. He starts dollar cost averaging. The price falls. As the price starts falling, he's buying more. So now he ends up with more Bitcoin because he had one already. He sold it. Now the price is falling on him, and let's say it's now 102,000, and he's buying back in. Now he's buying with Bitcoin being 102,000, he's buying 117,000 worth of it. So now he owns more Bitcoin. And he can keep doing that. Every time the price goes up, sell. When it comes down, buy more. And it could be all automated. And he could be bringing in more money on top of that. And that's how the rich get richer. So the final thought is you don't have to choose. You could do a little bit of both. And you could do something, and this is where I'm doing this right now. I have a big chunk in there, and I'm dollar cost averaging the rest. Right? So I already know I have multiple wallets with a lot of money in there, borrowed, buying Bitcoin, and I have cash on the sidelines that are just dollar cost average every month, helping me to live my life, build my business. And if Bitcoin falls, I'm cool. If it goes up, I'm cool too. Because again, of course, it would be better to have that money sitting in Bitcoin, but I have to play both sides because I cannot risk the business, right? Stack has to exist. So I always have to have money for Stack to exist. And if I put it all in Bitcoin and prices fall, I won't have enough to pay my team and my expenses on the business. So I think that is the way to go personally. But the truth is, if you've watched this far, you know that building wealth comes with leverage. You need to, if you're buying a house, rental property, or to live in, most people are not able to buy the full house up front. If you can, you're in a different stratosphere of wealth. You're going to take some kind of loan. And your hope is over time, as you pay down that loan, the asset you bought goes up in value. That's how houses work. That's how rental properties work. That's how Bitcoin and Ethereum work. So if you want to get into it, check it out. Go to stackit.ai/guide to understand it more. You can schedule a call with us to get more conversations on how it works. You could join the free community. The link is in the description. And hope to see you on the other side. And if you really want to know how much Bitcoin you need to retire, watch the next video.